Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Oh yeah, it's that day of the week. Everybody knows it. Everybody loves it. It's Friday, everybody. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. Was not with you yesterday due to our live trading room. Those of you that were with us, hope you had a good day, and those of you that weren't, I hope you had a good carryover day anyway. So let's go ahead and dive right in to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakout trades and turning point trades from an educational perspective. All right, so looking at the S&P, I left the line on the chart that I looked at yesterday as a potential breakdown short, and this is actually what happened yesterday. We were looking at this level. I'm on a 15-minute. Let me go to the 1 hour. When we were looking at the level, it was right around this time of day, and what I had seen was an area here that had been hit a number of times. Matter of fact, this is the setup that we like. I had this. If I can, let me start fresh here. There we go. I had this little area here that had been hit once and we moved away, hit a second time, we moved away, and then on the third time, so it was 3 times that had been hit, and I had a good inkling that, okay, well, once we get to the bottom of this area, we're going to see a bit of a breakdown, and that's exactly what happened. We hit the bottom of the area, and we got a breakdown, but boy, that didn't last at all, did it? It came immediately right back up, and my fear was this little wick over wick level, which is exactly kind of where it stopped and bounced, and boom, popped right back up. So yesterday was a good example of a failed breakout attempt. Now, the failed breakout attempt was just due to the simple fact that there were enough buy orders down here to turn it around. And sometimes you're going to run into those, right? Sometimes there's going to be a sheer mass of buy orders that turns it around. Well, then price just rallied back up. Now into this area up here. This is a 15-minute level. Now, how do I know it's a 15-minute level? It's got pink lines. So let me move to the 15-minute chart. So the area that we identified was this 15-minute area right up in here. And it's this little bit of basing before a pretty strong move down. Now, it popped just a smidge higher. So you may or may not have gotten in the trade, or even you may or may not have gotten stopped out of this position, depending on how tightly you place your stop. Realistically, you got to give it a little bit of wiggle room up above this region. And now we're starting to move out of it. Now, I will say this. We hit it and we came down and back in. I typically like to see a more aggressive move out sooner, but we have kind of begun that move away. So nice little reversal opportunity there, which is no longer going to be valid since we traded all the way to the top of it. And now you've got to look significantly higher at this pivot as kind of your next reversal opportunity. Now, we still have a level way up here on the hourly chart that we have not been able to get back to. We identified this on last week on Sunday evening and been unable really to get there. This is where we were Sunday evening when the markets opened up, and where we believed that there was a decent reversal. Price just hasn't gotten back there yet, right? So we're still down for the week pretty significantly overall. And so what do I see for a reversal opportunity today? Well, if I come back into this 15-minute time period, we're down about 14.5 points this morning. Right in here, actually all of this is a potential reversal point, I believe. If we get a rally back up, all of this becomes a bit of a potential reversal point. Now, we've seen markets have some sell-off on Fridays over the last couple of weeks. So I'd be interested to see if we get another one on this. And if we do, then that could be another bite at the apple to get short. Now, if you're so inclined, you could just take this little pivot right here. By just taking this pivot, you have a slightly, smaller area, which lowers your risk by a smidge. And so that may be a decent opportunity to get short if price does indeed return back up to here. You may actually, then be able to use that, even as a confirmation style entry if you so choose. But I do believe, that would be a potential for a reversal. And if you miss out, it's a very small window, small level. Looking at the Nasdaq, same thing in the Nasdaq. I thought we may have a decent little breakdown. It did not get there. We didn't get up to the same 15-minute level in the S&P that we did in the Nasdaq. This is that same 15-minute level that I identified in the S&P showing up in the Nasdaq. I didn't put it in I didn't put the Nasdaq one in purple simply because it shows up as a wick over wick level on the hourly chart. But this is the same level that we identified in the S&P where we saw a bit of a reversal. So the Nasdaq level stays. I'm leaving the Nasdaq level in place since we reversed there on the S&P level. But what does this tell me? Well, this tells me that fundamentally the Nasdaq is weaker than the S&P. And so if we do indeed get some sort of a reversal back up, the Nasdaq might actually be a better opportunity for a short entry than the S&P would. So if I move this to the 15-minute chart, where would that same level that we found in the S&P would be the equivalent of right up here in the Nasdaq. So let me highlight this area here, and this is another potential reversal area, potential turning point right through here. Looking next at gold. So in gold, I had a potential short setup in gold up here off of this level. I don't like the way that we're approaching it. Now, we do have a lot of selling pressure. These upper wicks indicate that there's a lot of selling pressure, meaning price keeps trying to pop up here, but is really unable to do so. So while I had a short setup in here, I don't like the fact that we're basing in front of the level. Basing in front of the level is something that scares me. So I actually took that trade off. For those of you that are on the live trade feed through Traders Army, you'll notice that we have changed the entry criteria for that position, and so I switched it to invalid, and it's invalid due to the fact that we have all of this basing. Okay, so we still may enter that on a confirmation style entry. It's still potentially a confirmation style entry. Keep an eye on the trade feed as it comes around, or just monitor it for yourself based on your own risk tolerance if you want to get short when it comes back out of the level. So that is our gold setup. Let's look at crude oil. All kind of lines here on my crude chart that we're gonna have to unpack here a little bit. So, unpacking our crude oil lines, we had a long setup in crude from down here, and it has rallied up into our reversal point. We hit our reversal point, and we came back down and hit, and we've hit that target one soon after. So now it's continuing its rally higher. So I need to remove all of these other lines as we have hit our target one, as well as come back to where we've moved our stop to on the break-even point, and our next levels come in just above us. Now, this first level that I've identified on the 1 hour chart looks a little bit wonky, but when I look at it on the 4 hour, this level makes a whole lot of sense. All right, this is a pretty wide area, though. You're looking at almost $1 worth of width. And so above that level, there's a 1 hour chart. So I pulled the 4 hour level, but there's also a 1 hour level above it. And the 1 hour level is this wick over wick area just right in here. Both of these levels have some validity to them. What I don't like is the way that we're kind of slowly advancing to the 4 hour level, which makes it a little bit more risky in the trade. That being said, the pattern that I look for, the price pattern that I look to see in most instances is this pattern of that we have here, which is a move down followed by some sort of a pullback. Now, this is very trend following, right? Move down, a pullback, move down, a little bit of a pullback. Now, if you look, these last couple of pullbacks in this move have been right at best. This is by far our strongest pullback up in the opposite direction of our predominant trend. And so by being that, that's the best pullback, that shows me that my downward momentum is probably weakening a bit. So since my downward momentum is weakening a bit, I'm going to be a little bit more judicious about what I get a short into. And so while I still think this could be a very valid short, a very valid opportunity, it's a little bit wider, and I don't love the way that we're basing into it in the hourly chart. So just monitor your risk tolerance if that's indeed something that you think you want to get into and try to take. This level here worked well the first time through, but now we're kind of coming up to the level just above, so just be aware of the risk in that one. Okay? Next, let's go to our bond market and our currency market. So in our bonds, I'm going to pull up this level here. So we had a confirmation style entry set up in the bonds. This is why we use confirmation style entries. Price blew right through that level, and it did not hold, right? Now, we didn't expect it to hold. That's why it's a confirmation style entry. And we talked a lot yesterday in the trading room about following rules, right? Spent a lot of time actually on the discipline around being a trader and why it's important. And that was the example that we used, because it's really tempting to try to get short when it starts to make its first little move out of that level, but because you have fear of missing out. But then when it pops right through, you realize, okay, good, I'm glad I followed my rules. So there's really not a whole lot I want to add at the moment in bonds. When I go to the 4-hour chart, I've got some levels above me, but no clean levels that I would look for a strong reversal at the moment. In the Aussie, we had a confirmation style entry. Price came down and moved. We had taken the stop and moved it at that point, so it was a pretty good little trade. Then we've come back all the way up and hit our next potential breakout point, and we're unable to get through it. This now sets up for a potential breakout long. Since we keep hitting this level, I'm going to leave this as a potential breakout to the upside. Now, I've got a couple of areas down here for me to pay attention to for potential long reversals. I'm going to come to this one all the way down here at the bottom. And the reason I'm going to come to this one down here at the bottom, well, this actually is not. This is a retest of this area here to the left, so I'm going to leave this one be. Theoretically, we could get something off of this. This would be probably our next best area. Our next best level would be off of this area right here. For those of you that trade the Aussie, take a look at this area. I didn't take this one because of the time of day that it was created, a lot weaker of a time of the day. In the euro, we've bounced off of our big picture level and starting to make a move. Talked about taking that stop and moving it to break even. So if you took that euro trade, your stop should at the least be at break even. I would actually take it and move it up to underneath this area here to lock in a little bit of profit. I've got nothing else to add on the euro at this point. Our short that we had identified earlier in the week still remains in play. In the Canadian dollar, we've come back up to our reversal point in the Canadian dollar. We've gone sideways for a few candles. So if you got short on the Canadian dollar, it's now time to take your stop, move it down to break even. Take your stop, move it to break even, so that you don't have any more losses in that position. So I'm going to throw a red line on here so we know that our stop should be moved to the break even point, just kind of as a mental note and as a reminder. Now, we're coming in over the weekend, so if we don't hit target, it's up to you and your risk tolerance to determine, do I close this thing out or do I allow it to continue to run over the weekend where I'm exposed to gap risk? And being exposed to gap risk isn't always going to be what people like to do. So just be aware of your own gap risk that would come up from staying exposed. But this would be our target 1 as well as our target 2. So just keep in mind those particular areas. Matter of fact, I'm going to annotate some of them on the chart here real quick so we know that we've taken our stop, moved it to break even. This would be our target 1, would be right down here, just opposed from that level, and then target 2 right here. Now, certainly you can allow it to keep running once you get to target 1. Doesn't mean you have to close all of it out, close out a portion, or close out none. It's completely up to you. Right now, we've set what's called a free trade stop, so that the worst we can do on this is break even. Moving next, to the Great British Pound. Lots of talk about what's going on in the world as far as Brexit goes. So we had a huge move down in the overnight hours, huge, parabolic, if you will, candles straight down. We've found a little bit of support over the course of yesterday, and now we're kind of popping back up. So this huge move down, as they say, huge. It built it built a price wall, built a wall, big one. But that big wall that it built, usually when I see those parabolic moves in currencies, those become a magnet for price, and it doesn't happen usually right away. It usually takes some time. Now what I'm going to do is I'm going to wrap my area around both of these areas. This is a significantly wider zone, but I'm going to wrap it around both of these because this is a little bit of a pivot here. This is a little bit of basing below a pivot high, and then another little area right here. So we're wrapping our lines around both of these for this occurrence. Japanese yen, we had a short setup in the Japanese yen. Price came up into the level and started its move down. It's an area where you just about hit our target. We're unable to do so. So on this one, I would say it's time, if you got short on this thing, close the position, get out, walk away. It does not look like it's going to come to fruition any longer, as we are back to our break-even point, and we just barely missed target 1. So just barely missing our first target, I would close this thing out at break-even so that we don't take a loss and carry something into the weekend. Copper, we're just kind of in this sideways price pattern here on the hourly chart. Not a whole lot of things occurring here in copper, so not a lot to add there. And then nat gas, let's talk nat gas for a minute. So in nat gas, I had set up a potential long right down here off of this parabolic move up. We came down into it and then hit it and then popped right through it. So the nat gas long did not work out. I was a little concerned with it simply because of all these parabolic moves in nat gas over the last couple of days. Flying up, we knew there was going to be a bit of a retracement, but with that retracement has gotten significantly stronger. And so let's see if we get down to the origin of the next, at that time, this was a parabolic move up. So let's see what happens when we get into that region, if indeed we do. On the way down, you may get another, you may get a little rally up to get short right in through here to get you, to short it as it pulls back down a little bit going further. So I know we spent a little bit longer today than we normally do. I tried to get in a couple of lessons in there as well. And if you stuck with me all the way to the end, I appreciate you. So, all right, everybody, I hope you have a great weekend. If there's anything you need, please email us, support@tradersarmy.com. Thanks so much, everybody. See you soon. Later.